All right, so let's jump through the guidelines of when to take a reverse mortgage. I think we talked about the real life example, how it can be beneficial, a reverse mortgage. We listened to Michael Schwinn. He told us the basics of the reverse mortgage. But really, what does that all mean to us? Let's give people some guidelines. This is, through my work, what I believe are the guidelines of when and how to take a reverse mortgage. So to do this, I have 3 lines. I have you taking a reverse mortgage at age 65, age 70, and age 75. This is a person who is 65 years old and is going to live to age 95, okay?
Yep.
So the 65-year-old, you have this blue line up there. Why are there different lines on there? Why are there different dots? Because the amount of money you're going to get over the lifetime of your reverse mortgage depends on a lot of things. Interest rates is the biggest factor, right?
Right.
So you can see on the left-hand side of the screen, you're going to get more money if it's a low interest rate environment, and you're going to get less money if it's a high interest rate environment.
Yeah.
So when do we take this reverse mortgage? So the first thing you notice is what, Miss Brannon?
Yeah. First, you want to just focus on the 3% side on the left. It's basically showing that it's better if it's a lower interest rate environment.
Yeah. Lower is better. So all things being equal, it's better to take out a reverse mortgage in a low interest rate environment. And that makes sense, right? I mean, it's just like common sense.
Any mortgage. Yeah. Any mortgage is better if it's
You want a
lower.
mortgage? You want a 3%, not a 7%.
Yeah.
So that's kind of common sense, I think, okay? But lesson number 2 is what, Austin?
The next variable is when do you take this? And I think most people would think, I'm going to wait till I need it, you know, when I'm in my 70s, but it's actually better to take it sooner rather than later.
The research shows that, and that's what this graph is showing. You notice the top graph there? That's people taking it as soon as they retire at 65. Okay, this is like Chuck. If he has a $300,000 home, he is 65 years old. Should he wait or should he go? Well, pretty much every blue line on that screen is taking it at 65 is better than the orange line, which is taking it at 70,
Right.
which is better than taking it at 75. Look at the reverse mortgage is a monthly payment that you get in the mail every single month. So it just is logical that if you start taking this at 65, you're probably going to get more money than if you wait till you're 75 or 80. Right? So we have this problem. Right now we're in a high interest rate environment, but we just told people that they need to take it as soon as possible.
Yeah.
So here are the general guidelines. If you have a bad chance of retirement success, and I define that as 35 to 45% chance of success. Now let's take a time out right here. How do you know what your chances of retirement success are? What did you have to do?
Well, you should have met with a financial advisor.
Specifically a level 5 advisor.
Level 5 advisor. Austin, you've been listening, man. I love that. You've already gone through the work. You've went to 5toask.com. You've researched what advisor I should be working with. You now, congratulations, are with a top level 5 advisor.
Yep.
Now you know your chances of retirement success. So now you're at this decision point and you have a 35 to 45% chance of retirement. The first thing we would say is don't retire.
Yeah.
Work a little more. I'm sorry, right? But in Chuck's example, he's insistent, I'm going to retire. The guideline for that type of person who has a bad chance of retirement success is to take the reverse mortgage and do it right now.
Yep.
Don't wait another day. Okay. So I got this next category, not great. Not great is 45 to 60% chance of retirement success.
Yeah.
Here you got this decision point. Okay,
Yeah.
the way the numbers work out, if it is a low interest rate environment and you have a 50% chance of retirement success, you take the reverse mortgage. But if you have a 50% chance of retirement success and interest rates are at an all-time high, right?
Yep.
Maybe you wait 3 to 5 years to make that decision because there is a chance that those rates will go down and in the next 3 to 4 years you can better yourself by waiting.
Yeah.
And then we have the what I call okay. What did we say the bar was, Austin?
80%.
80%. So we've had people like this. They've got a 70% chance of retirement success. Not bad, right? But if we go through the AIM retirement system and they still have less than an 80% chance of retirement success, you know what I'm going to tell that person? Look, just know that there's this tool out there called a reverse mortgage.
Yep.
I know you don't like it. We're not going to get started on this right away. But in about 10 to 15 years, we might be having a discussion because we look at your plan every year. We update it every year. maybe we're going to have to pull out this last tool in our tool belt.
Yep.
So very simply, bad, take it. If it's okay, it's a decision based on interest rates. And if you have a pretty good and okay retirement, we're going to know that we have this as the last tool in our toolbox.
Yep.
So just really quickly here, just want to show you. So look at this. Bad chance of retirement success. We'll say 40%. What did I say earlier? I said you should take it right now. So I've got 5 different interest rate environments on this chart, okay? 4 of them, you'll notice I put a green dot on.
Mm-hmm.
Okay, those 4 green dots, you're never going to get any better than where you're at right now, right? But there is that blue dot. You're in the highest interest rate environment we've seen in 40 years. You know, you're thinking, well, should I wait? Look, if you have a 40% chance of retirement success and you insist on retiring, don't take a gamble on your retirement. It already is at a very bad spot. Don't take a chance. Do it now. Is there a chance that rates could go down 2.5% in the next 3 years and maybe you're in a better spot? Maybe, but probably not. Don't take a risk here. You have a 40% chance of retirement success. Do the reverse mortgage now. But what about the not great people, the 50%? Like I said, that's a decision point.
Yeah.
If the rates are low, just do it. You're locking in a greater chance of retirement success. And like we said, if the rates are high, give it a little delay. Wait 3 to 5 to 6 years before making that decision. But look, if you have a 70% chance of retirement success, let's just put this in the back burner for a little while. And that's what makes sense to me.